I was completely wrong-footed by the Swiss National Bank's decisions. They said very firmly just a month ago that they were committed to defending the current levels and that the negative interest rate strategy was part of a longer-term and deeply considered move. Therefore, what they have done today makes no sense, and I'm absolutely confident they will have to take steps now to stop the headlong appreciation of the Swissy against the euro.
All right, while we sit here safe and warm in our financial cocoon, we are often forced to realize that what happens in tiny little nations like Switzerland will not only ripple into our wallets, but has the effect of causing minor panic in places like Wall Street. Let us thus deal with the continuing disaster that is the euro and more. Welcome back to Midpoint. Bulls, Bears, and Bucks. The Newsmax director of financial newsletters, Jeff Yastine, joins us once again. All right, Jeff, here we go. The Swiss National Bank decided yesterday to end its policy of keeping the franc from appreciating beyond a certain point. All right. There it is, the basics. Now, English, if you will, sir.
Well, keep in mind, Switzerland is actually an exporting country, not unlike a Japan or a South Korea. They depend on what the goods they produce there and selling them into the Eurozone, essentially. And so they were running into a situation where you had the Swiss franc, which was very expensive, compared to the euro, which has been obviously going down in value with all the news that's coming out of there. So it really came to a situation where they had to do this, or they would face a situation where their own economy would start to sputter even more because their goods are just too expensive to sell into the Eurozone or other places around the world. So this really, the markets were essentially calling the Swiss central bank's bluff on this, essentially.
And what we hear is that a lot of the foreign exchange brokers today are getting heavy losses from all this. We're talking about all around the globe. Now, what kind of trickle-down effect might this have eventually when it comes down to the American consumer? Any at all?
Yeah. Well, for most of us, here at home, I don't think there's going to be that much in the way of an immediate or direct impact. But the thing we will see in the markets going forward here is, a lot of this is done on leverage. It's done on margin. So when somebody wakes up the next morning and finds out that a highly leveraged position they had just went down by 20% in real dollars, then chances are they're suffering a 40 or 50% loss or more, depending on what kind of position they had on. And so when you wake up with that kind of situation, what do? You got to make that margin call in an immediate sense. So you have to then go out someplace else and sell some other kind of asset, some other stock, some other commodity. So we may see, when we see some certain stocks, some indexes going down, some commodities going down, and we don't have a specific reason for it, it may well be because some big fish out there is selling in that area in order to get the money to meet a margin call regarding the Swiss franc.
All right, Jeff, stand by because